I've heard all that glitters is not gold, but some of it is. Hi, this is Tim from TradingStrategyGuides.com. Gold is in a trading range right now, and I don't care if it breaks up or down. We're going to make some cassiola on it either way. Let me know in the comments what you think of the new segment, Factoid of the Day. It's kind of fun looking up these little nuggets of news. Wow, maybe that's what I should call it. Nuggets of news. News nuggets. Not much has happened since Friday's video, but I'm going to start with open trades, then move on to the factoid of the day, and then to the gold trade setup. Then we'll get to today's trading maxims. Stay tuned. Remember to click the subscribe button and hit that bell so you don't miss any of our trading goodness. We've only got a few open trades this morning, so let's get to it. Apple dropped like a rock on Friday. It didn't hit the stop for the second half, so we're in the game. Of course, the first half hit target right here and already closed in profit. By the way, I'm going to start using the long position, short position tools in TradingView. That's what this green is right here. TradingView keeps dropping my trade lines, and it's really annoying to have to keep drawing those things. So it hasn't dropped this tool yet. Anyway, representing trades is exactly what this tool is for, so I guess it makes sense to us. I'll show you a little bit more on this tool shortly. The S&P 500 is looking a bit bearish right now, attacking this level right here. It hit the first target right here, so we got half off for profit. Second half stop loss is currently at break even right here. So this is a winner no matter what happens now. The Great British Pound Canadian dollar is looking a little bearish right now as well. But this one hasn't hit our first target just yet, which is right up here. The stop is down here at 163.79. And this is a half-size position due to the wimpy volume on the breakout candle. We'll just continue to wait on this one. This is a good chart to show you the long position tool. I like it because it's much easier to see the trade levels, which are right over here. Target 167.64, entry is 166.10, and the stop loss is 163.79. I think it makes the charts a lot easier to read as well because I don't have a lot of extraneous lines and tags and stuff. Plus, when you hover over the tool, let me shut my drawing tool off. When you hover over the tool, it shows you the pip difference, entry, and stop loss down here. If you want to use this tool, just look over here on the left. Let me circle this. Then to interact with the chart, I have to shut the drawing tool off. This right here, click right here, and you can see long position and short position. I've clicked the star over here so it appears up here in my favorites tool. Alright, time for the factoid of the day. Well, here's a thing that could be painful to payday loan companies. 12-ish% of companies, which include Walmart and McDonald's, are offering a great new perk: on-demand access to earned wages. Yep. No more waiting for the old paycheck to buy whatever widget it is you want to buy today. You can just get online and get your money as you earn it. Payday loan companies have been making huge bank by charging exorbitant interest rates for loaning your money for a few weeks. So, is this going to solve that problem? Well, Daily Pay, one of the leading accelerated pay providers, yes, that's what they're calling it, accelerated pay, boasts the lowest transaction fees in the industry at $2.99 per wage pull. If you have problems planning your budget already, then this could become pretty expensive if you have to pull money every few days. Even, another provider, yes, the company name is Even, go figure, charges a flat monthly fee of $6 to $8. They say the average pull is $150 per month, so that's maybe a 5% fee, which could be a bit better. But I'd be willing to bet they limit the number of pulls per month for that fee. Douglas Bonaparte, not to be confused with this guy, who is a certified financial planner and president of Bonafide Wealth, said that the option to receive pay in real time tends to make bad discipline worse. Allowing low-income workers access to wages ahead of actual paychecks may lock people into a pattern of subsisting day by day. I guess time will tell whether he is correct. Hat tip to the hustle for this piece of news. The link will be below. Let's take a look at the gold setup. Gold has been in this trading range right here since mid-August or so. The trading range consists of a support level and a resistance level that price has tested and failed to breach several times. You can see that the 1553 level up here has been tested 4 or 5 times, and the support level of 1483 has also been tested quite a few times. Remember, the count is very subjective and there is no precise definition of what constitutes a test of the line, because a line is never just a line, but it's always a zone. So you could consider this a test, or this a test, and this a test, this, probably not this. It's, like I say, very subjective. These here, and here as well. And I always like to have a confirmation of a consolidation like this with a nice drop off in the volume right here, like so. Remember, this is never perfect either. This volume spike right here, I consider that an anomaly, likely due to some news event, but you can see that the volume continued to decline afterwards. We're looking for a volume downtrend here, which is defined as lower highs like so and lower lows like so. The volatility is represented by the average true range, or ATR, which is simply an average of the length of the last 14 candles. And we like to see that in a decline. Again, not perfect. There are spikes once in a while, but we're looking for a downtrend here. So here's the plan. We will simply buy a daily candle close above the range or above the 1553 level, or we will sell a daily candle close below the range or below the 1483 level. That means on the breaking candle, we want to look at this volume, and this volume bar should reach at least to the volume average. If it doesn't reach the average, but at least reaches 75% of the average, we will take a half size position to reduce risk. You can calculate the average by taking the volume number and dividing it by the average volume, and you should get a result of 0.75. If you don't get at least 0.75, don't enter the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So when you get your break, look at the ATR right here, multiply it by 1.5, and put the stop that far behind the entry, not the range. So you calculate your stop and your target from the actual trade entry, not from the range. If after entering the trade you get a candle close back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically, I do this by using 2 positions. The first position has a hard stop loss and a hard take profit at the appropriate prices, and the second position will have a hard stop loss and no take profit directly associated with it. I also will only risk 2% of my account on each trade. No single trade should make or break you. And that's the setup on gold today. Please remember, I am not trying to tell you what to do. I ain't your mama. I'm just telling you how I handle these trades If you want more details about what I do, look below this video for a link to my trade management video. If you've got a trade management plan that works better for you, by all means use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your personal psychology to have the best strategies for your own trading. And psychology, in my opinion, is the most important part of trading. And the trading maxims are my way of helping to handle my personal psychology. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. These maxims come from various sources: the internet, friends, coaches, teachers, whatever. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. Today we're going to dig into the archives for our trading maxim. Tim's trading maxim number 47, leave your ego at the door. The market doesn't care. This one I got from my good friend Robin. He never wants credit for these things, but I do it anyway. I guess if you've been on this channel for more than a minute or so, you probably know that I do CrossFit. By the way, if you don't know what CrossFit is, it's just a very intense exercise program in a gym with a coach and so on. Plus, another minute or so on this channel, and you'll probably know that I'm over 60 years old. Most of my gym mates are half my age. Another thing that you may not know is that I used to be a big and bad power lifter when I was in my 30s. So walking into this gym with all these 20 and 30 somethings doing amazing athletic things was pretty intimidating for me, considering I was significantly overweight. I learned really quickly that it was monumentally important for me to leave my ego at the door, for my own sanity if nothing else, or I probably would have quit within the first few days of starting. And yep, another CrossFit story that is also a market fit story. The market will beat you up and spit you out if you can't leave your ego at the door. The market is always right. Always right. Did I say it was always right? If you don't agree with the market, then you will always be wrong. Don't insist on your trade being right. When you realize that you're in the wrong direction, shut it down and move on. The best salve to your ego is making profits. So don't insist on being right. Insist on being profitable. Remember our gold trade plan here. We're going to buy a daily candle close above the range or sell a daily candle close below the range. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Hey, you don't want to miss any of my trading picks? Sign up for my free trading picks email list to be sure you don't miss them. I'll be sending out 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll get to see them first. Plus, you'll get first notifications of anything special that's happening. And you know what the best thing is, right? It's free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or two on each one and maybe some extra Q&A or training on Wednesdays. Don't hesitate to ask any questions you may have. I try to answer questions as quickly as possible. And remember, the only stupid question is the unasked one. Follow me on Twitter. Sometimes I post things there. I'll put my Twitter link below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great week, and I'll see you next time.